Hey friends, Lucian here with the Bullish Bears team. This video is going to be on the head and shoulders pattern. So I'm going to show you how to trade this pattern. I'm going to show you a perfect little setup, and then I'll show you several random looking ones that are not perfect looking, because in the real world of trading, not everything looks perfect, and there's also fake outs along the way. So before I begin, if you hear any snoring in the background, that is Honey, my doggie. So, she's not bored. I think she likes hearing about head and shoulders patterns, and it soothes her. So if you hear any snoring, that's what it is, right? So head and shoulders patterns are a bearish pattern. They're found everywhere, right? And I like to use the example, well, first of all, they're found everywhere and on all chart time frames, and they're very consistent, or very common, right? So I like to use the SPY example because I like to hammer home, and you'll hear me hammering home that candlesticks, they're the foundation to absolutely everything when trading. And really, when I say in this world, what I mean is, let's call it like it is. Everything really revolves around the stock market, making money, right? Whether it's trading or whether that's your 401k or investing or anything, right? It's buying and selling of any types of stocks, whether it's trading or investing, whether it's the average person doing it or whether it's a big name billionaire doing it. All that buying and selling leaves clues on the chart, price action, which is the foundation. So you'll hear me saying that over and over and over again, because what happens in this world, good or bad, shows up on the charts. So when you can learn this stuff, again, a head and shoulders pattern, you'll see it on SPY, you'll see it on Apple, you'll see it on penny stocks, you'll see it on futures, you'll see it again everywhere. So it's just understanding and seeing this pattern, because then you'll see a reversal to the downside is potentially happening. Sometimes you'll see the pattern form within a few candlesticks. Sometimes it happens bigger overall, right? So head and shoulders patterns, just like any patterns, they could be small or they can be big patterns, right? So that's why it's kind of see what's happening and then look and zoom out. Look left for those support and resistance levels that extend out to the future, and then also look for those bigger patterns overall and in those trend lines. So, or using trend lines to see the bigger patterns overall. So you'll see right here on SPY, I have just a daily chart pulled up here. So this is why when people say, oh, you can't see things happening, you can't see when something's going to happen, the market's going to drop, and blah, 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 which is a bunch of baloney. You might, again, not get the exact day or week right, but you can become very, very close or get a really good gauge. So you can see right here with the head and shoulders pattern, I'm going to show you a really nice looking one, and then we'll look at a few different examples. Price moves up and then it creates a peak, that first peak level, right? So you'll hear me saying peaks, resistance, ceiling levels. I like to use analogies. So buy low, sell high. Buy at support, sell at resistance. Buy at support or floor levels or valley levels, sell at ceilings or peak levels, right? Just to kind of use those analogies. So price moves up, it forms a peak, a ceiling or resistance level, and then price falls back down. So this is the first peak. Then price then moves up and creates a second peak or a head, right? So this would be the left shoulder. So you have a head. So picture when you're looking at head and shoulders, the human body. You're staring at another person, right? I don't want to say man or woman and get in trouble nowadays. So you're looking at another person in front of you, and you'll see when you're staring at that person, sorry, I'm just being silly, you'll see a head, and then to the left, a left shoulder, right? So this head breaks above this previous peak level, right? So this peak breaks above this peak, so it creates the head. Price then falls back down, gets a bounce back up, and the right shoulder is typically lower than the left shoulder or co-equal, but sometimes or many times you'll see a fake out, a little one candle or more or a wick that'll pop up, give you a fake out and fall. But you'll see, typically, again, it's a head, left shoulder, right shoulder. The right shoulder can't break above that left shoulder, hence causing the head and shoulders pattern. Then you have a neckline, right? So everybody, I believe, right? I don't want to get myself in trouble again. I believe every person has a neckline, right? So if you have a head and two shoulders, you have a neck. So when price falls below the neckline is typically when you take a short position, right? So this is where you would short as price falls below the neckline. So this is kind of part of a neckline, or you have the angle, right? So here's the horizontal neckline, but then you have angular, right? You got to learn those horizontal and angular support and resistance levels. So you're connecting these peaks right out, or these valleys out here, which extend out to the future, that trend line. And then you have this little base right over here, which you can do it that way, right? Just kind of give, I don't want to just clog up the chart with a bunch of lines, but you can see right here, when I connect this peak out over here, it goes out to the future, and kind of this one out over here, right? So again, what happens in the past way over here, you can extend out over as well, but I don't want to put a bunch of lines to be confusing. So you would take a short position as price falls below this neckline, and then you would use a candlestick close above the right shoulder as your stop. Now, again, that's just a guide, right? That's just typical, right? You short below the neckline, candlestick close above the right shoulder as your stop. Other people will short below the right shoulder, right? Some other people will wait, do a short below the right shoulder, use a candlestick close above as your stop. But also just remember, you know, it all depends whether you're trading shares or options, right? That all depends on how long you're going to stay in. If you're trading shares of a stock or shorting shares of a stock, you can be in the trade maybe a little bit longer, depending, right? Compared to like doing just a naked put or just a blind put, buying a put on something and losing the time value. Again, we teach this stuff in our community. I don't want to go all in depth on all the different trading styles, but that's just kind of the gauge of shorting below the neckline, candlestick close above that right shoulder as your stop. Now, again, this is on a daily chart. So this is where you can see, you know, that's why I like to use the SPY example. When you hear something, oh my goodness, the world is crashing, or XYZ, or a talking head on TV or social media or something saying something, you can look at the charts and you can see, oh, that happened. That was a head and shoulders. Oh, that bad news, this drop happened right here. Whatever happened, whoever was mad at whoever that day on the news, well, there was the warning signs right over here. It's very interesting and coincidental how all of this stuff happens, good or bad, and many a times it happens around the good or bad news that you hear on television, which is crazy, but also great. It's an opportunity, because this is where if you learn the patterns and you learn what's happening, then you can see what's going on. Oh, this major event happened, this major good thing, this major bad thing. Well, the clues were on the charts. So this drop, I don't know what happened over here, but all I know is there was a clue of a head and shoulders, right? And then you'll see price broke this lower trend line, right? So you'll see the head and shoulders pattern within, just kind of connecting those peaks and valleys again. You know, again, you can kind of go over here. You can call that kind of a rising wedge-ish pattern right over here. So price kind of went up. What did it do? It hit resistance, came back down, went up again. Not quite at resistance over here yet. Fell back down, but what did it do? It failed support. And when it failed support, it kind of went back up again. And then now previous resistance right up here, or support, then becomes resistance, and you can see this consolidation, right? So what happens now, you'll see the bounce, and this is where, again, you'll see a head and shoulders, and then it'll create another head and shoulders, right? So you'll see, what did it do? Price fell back down, it went up, and it got another bounce, right? So then I just remove the drawing, and what you can see here, what is that? Another shoulder, right? Head, left shoulder, right shoulder, right? So then price, what did it do? this left shoulder, and this is where you get a little bit of the fake out, right? So this is, I wasn't even intending to use this example, but look, this candlestick broke above this previous peak level over here. What was that? That was a fake out, and then it had a hard drop. That's what you got to be very careful of those fake outs, right? So you want to see when price breaks above a ceiling level or a support. If price breaks above a ceiling, you want to see it hold. So like if this is the ceiling or resistance level, you see this retest, you want to see it hold, not do this if you're bullish, right? When price hits a support level like down here, you want to see it hold support and continue up, right? So you can see something like here was some support. What did it do? It failed, right? So you can see kind of back over here, I'll just kind of, what will I do here? I'll just remove this because watch, it just keeps going out. So always look left, which extends out to the right. What happens in the past affects the future. See this previous peak level right over here? Extends out to the future. So what happens here? Price failed, bounce back up, and what do you have up here? Right? This peak broke above this peak. And so what happened down here? Price fell down right here. No coincidence. Look at this hammer. Kind of hammered off this support drop level and stayed above right over in here, right? This support level. Bounced back up, fell back down, and then voila, where's my drawing? Right shoulder, right? Head, left shoulder, right shoulder. Head and shoulders pattern. And then, so you see how they just keep going and going. Now, I'm showing you the SPY because stocks, especially many of the large caps, run with the market overall. So that's why if you pull up a chart of SPY and then you pull up a chart of Apple, they're almost identical. And then many of the other large cap stocks kind of have very similar patterns. But Apple and SPY, they mirror each other, right? So, how would you look here with the neckline areas? Well, just kind of go over in here and you can kind of just find those trend lines. So you can see over in these areas right here, you can kind of go right over in here, the neckline. So connect these bases, or you can kind of just go back over here to this level right here. See how this kind of extends out to the future and kind of goes out over here. And so you have a left shoulder, a head, a right shoulder. And then what did price do? Right near that angular support level and that horizontal level, that neckline. So you would take kind of a short. Again, it's not perfect, and hindsight's 20/20, but you would take a short as price failed the neckline. And then you would use a candlestick close above here as your stop, that right shoulder area, right up in here. All right. So that's head and shoulders patterns. You can see them on all different time frames. That's a daily. I'll just pull up let's pull up a 5-minute chart, right? And just kind of zoom in. And you'll see, look right here. You'll start to see these patterns everywhere. So this is, again, whether you're a swing trader, day trader, doesn't matter, right? Long-term trader, you'll see these all over the place. See that? Head, left shoulder, right shoulder. Where is the neckline area? You can kind of extend it out over kind of right there, right? So you can see neckline kind of shorting down here, short down here, candlestick close above as your stop, all right? So that's a 5-minute. Let's go to a 1-minute chart, all right? Look at that. See that 5-minute? Kind of coincides on the 1-minute. You can see extending out over there. But like you'll see on these 1-minute charts, they're everywhere, especially when day trading. Incredibly important to learn this pattern, especially any trading, especially in day trading though, because then you can see what price action is doing, right? You can see kind of a left shoulder, a head, right shoulder, right? Fell back down. You can see head, left shoulder, kind of our head and shoulders over here. So it's a little bit above that peak. You can even call that, that's an evening star, not really a head and shoulders pattern, but just to kind of get, again, you'll see the stuff, right over in here, right? Head, left shoulder, right shoulder, right? So the thing to be aware of, not to drive yourself crazy with it, is just when you're looking at the right shoulder, you want to just see, right? You want to see if price can break resistance, those ceiling levels. So if you extend this out to the future, it's no coincidence why this happened. Price couldn't break above this peak level, so it fell back down, right? So you have that head and shoulders pattern. You got the neckline right over, kind of like right in here. So you can take a short down here. You can short below here or the neckline, right shoulder area. You got to be careful. Again, it all depends what your strategy is, but I just want to draw your attention to the patterns. Get the overall perspective. Again, you'll hear me say it over and over and over. Candlesticks, price action, foundation to everything. It doesn't matter somebody's trade rooms or trade alerts. We have our Discord. We have our trade rooms. We have our real-time alerts. We have our trade alert signals. All that stuff is great, but it's meant to be a guide to teach you and help you. It's important to learn this stuff for yourself. Learn price action yourself. We teach you the skills, but it's important for you to learn and do it yourself and not rely upon us or somebody else to tell you when to buy or sell. You want to learn this. This is a skill to learn yourself. And if you put in the time and the energy that candlesticks deserve and require to learn, it is a skill that you can have for the rest of your life and know what's going on. And then you won't have to even worry about like watching the news, watching what's happening, watching this, watching that. Look at the patterns. They're not perfect, but they tell you very, very important clues. And then when you zone in, especially on SPY, and you can see if you're trading futures and SPY or any of those large cap stocks, when something drops really hard or goes up really hard or really quick, during the day, if it's if there's economic news that day, that moment, or something comes out, well, you'll see those sharp volatilities, those sharp jumps, those sharp drops. It's no coincidence. It all kind of runs off of news and what's happening, right? So this is why it's great to learn, kind of tune out the noise of what's happening in the world and the talking heads and learn price action. Because candlesticks teach you really the foundation to everything, because these people do not buy and guess, or they don't buy and sell based upon guesses, right? They don't just, you know what I mean? They're not just guessing and putting their life savings into guesses. They learn these support and resistance levels, and then they manage their risk when something goes wrong. That's it. That's trading. That's how simple it is. It's not easy, right? But it's kind of take out what you want is going, you want something to happen, and just look at the patterns. And when something fails or goes against you, cut your losses, manage your risk, because patterns do fail, but overall they're pretty reliable. You just got to put the different time frames together. If you see, a head and shoulders on a 1 minute, or depending on your time frame, look to a 5 minute. Expand to the bigger time frames. So when you see right over here, I kind of showed you from the daily in, if you go out overall to the weekly, then you can start seeing things on a weekly chart. And, you can see, there's kind of a, here was kind of a sharp head and shoulders pattern right here, kind of a left shoulder, head, and then right here, quick right shoulder. Now, what happened here was that December of, was it two? I always get these. Was that the, that's where I don't want to say the term and get myself in trouble. I always get confused on the weeks going back. This is, all right, 2022. So this would be 21 right here. And then 2020. Oh yeah, that's where it was. That's what I wanted to show you. This is a perfect example as to, again, I'm making this video in 2022. People will say, you would have never seen what happened a couple of years ago coming and that changed this world. Well, of course, we might not know what's going on behind the scenes, but something on the charts could be a big warning and tell you, right? And be like, heads up, something could be coming. Weekly chart, this week couldn't break that head or left shoulder, right? Head and shoulders and boom, boom, timber. Again, you might not know the event, but the charts can tell you something is going on. And when you zoom in on that charts, on that head and shoulder, before, remember, single candlesticks, double candlesticks, 3 candlestick patterns, bigger patterns overall. You can say, oh, I couldn't see that head and shoulders coming. Well, that's okay. Guess what there was a warning of? There was what is that pattern? Bearish harami. So that weekly bearish harami right at where price couldn't break this previous resistance level, and you can start seeing that selling kind of coming in. Well, it wasn't actually, this selling happened down over here. Just be aware of that pattern, right? Something, be aware of it. And you can start to see these things again, kind of when price goes up, if this can't break a previous peak or over in here. That's where bigger overall patterns, what's happening in on those smaller overall patterns, and then the time frame. So I just showed you again, head and shoulders pattern, like zoom in, zoom out. Just that's why trading style and what you trade and time frame, that all comes secondary, right? Learn price action and put the price action to your trading style. You can't skip price action and learning candlesticks and jump right to, hey, I want to make money trading. You got to understand the foundation of it. And it's this over and over and over, this repetitiveness over and over and over. Learn price action, and then you don't have the guesswork. So this stuff, again, is what we teach, obviously, depending where you're watching this video, in our candlesticks courses. We do it in our ebook. So we have our candlesticks ebook, our wallpapers. Make sure you download our wallpaper backgrounds and have them up on your computer and see all these different patterns and let them hit you, right? Because the more and more you see this stuff, the more and more it gets into your subconscious and conscious. And then you'll start to see these patterns everywhere. And then also we teach this stuff live every day in our trade rooms. We have a Discord, which is the central hub of our trading community. We have a large caps, futures, and penny stocks room. And we go over this so you can take your trading style, right? If you're in whatever your trading style is, whether you want to do penny stocks, large caps, or futures, go into those rooms or whatever that room is that is your trading style. And then when you see one of our moderators teaching and they're showing these patterns, you'll understand it more, right? But if you're going to go into those rooms and you're like, hey, someone tell me you want to buy or sell. That's why most traders fail, whether anywhere. Like if you go to any trading service, if that's your expectation on how you're going to make money trading, you're going to fail as a trader because you're always going to be late to the punch following somebody into a trade and out of a trade. That's why we are an educational trading community where we teach you how to trade. We give you the community for support, fun, camaraderie to learn, but it's all about the foundation of teaching you so you can become your own independent trader.